YouTube. What's going on, man? Happy Monday. Happy Monday. Sorry we're a little bit late, but I have been in the office, as you can see. Got my trade already plotted out, my pathing here. We're looking for YM to pull back a little, get our stop under this low that was made at 9 o'clock, 46,362. Pretty much a last Monday high long if we can get to it. If not, then we'll be pretty much sitting on our hands. NQ is pretty much close to a breakout. It's pretty much in breakout status. Same thing we're looking at on Friday, so we just need to watch that. Yeah, as of right now, NQ is over. NQ is over the all-time high. So yeah, so right now we're in breakout status. I can take a trade if I want it, and I need YM to be at 46,462 for me to be even looking at a trade. So pretty much sitting on my hands right now. Market's telling me to sit on my hands, so I'm going to do so. But just watching the YM guys. Got my boy Meet Kevin up right here. Already know my specs and everything. It's 10:30, so as you guys know, usually around this time I already know what trade I'm looking for, what I need to be doing. So right now I'm just going to be patient, wait for this situation to develop. Looking to get in the trade by 11:30 so I can be broken even. I have my risk off by my 12:30 time. So I just be sitting back to literally sitting back to 11:30 just to see if price is going to pull back to either 46,460 area. That's my earliest entry. Anything lower than that would just be absolutely great. So yeah, just gonna sit back, be patient, and see if we get an opportunity to come to us today. Same as always, man. Friday we did end up having a 1.8k day. Took about a 1 hour in each account. TP1 taking each account, 4 accounts. So it was a pretty good day. About 1,800 at the commissions and everything. So very good day, man. About an $1,800 week. Friday was the only day that we traded last week with breakout rules in effect. Just following our rules every day. Same thing as today, man. Nothing different. So yeah, man. Keep the road to funding. Road to live funding going. As you can see, we are in the money. We're in the money on all 4 accounts right now, but these accounts I got on my end, we are in the money, sitting at about 50,005, pretty much a half hour up. So pretty good, man. But yeah, like I said, just sitting back, chilling today. NQ got the breakout alert. Yeah, so it's looking like it's gonna be a sit on my hands type of day. And then we got Fed Powell talking tomorrow, so I won't be trading tomorrow. Yeah, look at that, man. NQ is taking off. Just took out Friday high and the previous all-time high. And YM is continuing on. Okay. Yeah, looks like players are trying to continue the divergence that's been going on. But as of now, looks like it's becoming an imbalance, and the 3 equities are staying aligned with NQ leading. Yes, the UNCH middle party and YM's lagging, but it's still headed to the upside. So it's no divergence going on. So that's cool. Yeah. Yeah, it looks like that 911 high was going to be the entry, but I couldn't get my stop under 360. Could get my stop under yesterday's low, 46.4. But just based off my strategy, every time that I do that, not put my stop under that spread 4, that SL4, my stop ends up being in traffic. So, yeah. Good structure. I know what's going on, just didn't provide an entry, so we'll be waiting around for about another hour to see if we get that entry. And besides that, man, if we don't, we'll be sitting on our hands, pretty much securing our profit. Each account is pretty much 2 to 3 days away from being passed. The highest account is at 51,000. So road to live funding, man. Boring stats, amazing payouts. We're on our way. Take a little break, man. Let my boy Meet Kevin rap, and we're here, guys. Here for about another hour. See what's gonna happen. All right.
To this. So this refinancing activity, this has been really propping up lenders and continues to happen as yields come down. But really, this supports household spending and stock purchases to some extent. Like, people refinance and they put money into stocks. It's basically cheap margin.
I may not wear the uniform, but I serve every day. My husband can be gone for months at a moment's notice. Blue Star Families is my lifeline, connecting me with communities that care. So my
down yields, bonds, sensitive, left, but because benchmarks demand it. If junk keeps rallying, you survive. If in turn you blow up, at least you weren't alone. Oh my gosh. Yeah, well, at least I wasn't alone, man. Fed is cutting with gold, crypto stocks, and credit at all-time highs. Yeah. That's true. I wonder if that's why you're seeing such a movement in gold. Oh, 10-year is now officially flat. Yeah, because look at gold, 37.51. I mean, we keep moving up, up and away, baby. Look at that chart. This is crazy. The 5-year gold. That's a great chart, by the way. Let's see here. Asset price inflation. Let's see. Second wave of inflation is politically risky because of the 26 midterms. Oh, by the way, check out the mug today. You always got to show off the mug. Look at this one. Remember the Alamo. Did you know 2 Germans fought at the Alamo? Yeah. For America. Remember the Alamo. They also got reinforcements that apparently were as young as like 16 years old and got way fewer reinforcements than I expected. So it was really no surprise the Alamo got run over. But yeah. Stable coins continue to be used primarily for payments, not as a means to save money. That's Muslim says that. Okay, don't save money with stable coins, use it as a rail. I mean, I think that's one of the big features of a stable coin is using it as a payment function. Any new dad jokes? What's up, Randy? No, I was thinking about this yesterday, actually. Okay, how about this? It's not a dad joke, but it's perfect for finance. Okay, it's dad finance. Okay, I think this one's awesome. So what you do is you multiply. We'll do it together. Let's see here. Let's see. Okay, ready for this? Okay, so you're gonna multiply 111,111,111 by itself. Okay, so not times 2. You're gonna multiply it by itself, and then watch what the result is. You ready for this result? The result of this math equation is 1, 2, 3, 4, 5, 6, 7, 8, 9, 8, 7, 6, 5, 4, 3, 2, 1. So there you go. Instead of dad joke, you'll get dad finance. This is finance with dad. I thought that was kind of cool. I was like, oh, damn. So there you go. Heart net worms. Let's see here. Let's see. The S&P 500 has another 50% upside before the bubble bursts, says Hartnett. How to trade the bubble. 10 equity bubbles since the 1990s. Let's see here. Yeah, exactly. We're calculating the national debt, exactly. Peak to trough gains. Okay, Mag 7 is the best bubble proxy. More to go. Finally, how to best position for the bubble. Well, you go along the bubble, but beware, bubbles are short and very concentrated. Well, let's see here. Tech is up 61% in 6 months to the 2000 bubble peak, while every other S&P 500 sector is down. Barbell bubble with distressed value. Asset bubbles boost economic growth, boosting cheap distressed value play. Only market that outperformed NASDAQ between 98 and 2000 was Russia. Short corporate bonds of bubble stocks. That's because credit will price in balance sheet deterioration before stocks. Oh, that's interesting. Hartnett reminds us tech corporate bonds fell 13% while spreads widened. Right. I mean, we're not seeing any spread widening right now, but that's a good point. Is maybe that's sort of your leading indicator of a bubble pop. Is when you start seeing softness there. Whoa. Okay. Let's see. Where's the plus? All right. It's interesting. Very well. All right. Cutting into the bubble. Very well. Let's see what is. So let's go ahead and give this a little save here. How's the market doing right now? Let's see. Super micro chillaxed a little bit. The Q is still going, dude. Look at this. 4% Tesla. Q's still rocking. Wow. I didn't think that with Tesla no man's land we'd be seeing a 4% day today on Tesla. I think part of it is that Piper Sand upgrade. That's pretty impressive. I think they upgraded them to like $500. So okay, cool. What else here? Okay, leading industries for the business cycle, confirm the market health, yet now they're sending mixed signals, reflecting listless economic indicators. Semiconductors are a clear bright spot, pushing new highs, but home builders and transports remain stuck. Confirm, let's see, what do we have here? All right, so this is... Okay, Fed Muslim just, I guess, and this just came through, close to average productivity levels that AI hasn't even shown up yet in productivity. Could be an interesting feature, actually. Muslim, let's put it right here, argues AI, remember you can get this data on the Meet Kevin app, that's where I post it all, argues AI productivity has not shown up yet. And let's see. Okay. Yeah. Interesting. Bear chart here. See if I can save this. There's a, the doomers are basically telling us that investing around these levels is associated with poor forward returns. Excuse me. Oh, yeah. All right. Let me see what else they're saying here. They are also suggesting neutral sentiment into big week for Fed speakers. Yeah, no bearish sentiment right now, though. So that's good. Okay. Besant says all options are on the table to help with Argentina. The only way for stock correlations to go is up. People like the sound up. I like the sound up. I like it when it go up. When slightly... Okay, let's see. Over the weekend... Okay, whatever. Correlations. Okay, and no, this is just boring. Boring. Soup data. Okay, no problem. No problem. So... we can do a little breakdown of what we just learned from the Fed and try to piece this together. But I think really the play right now with, until jobs collapse, let's write that down. Okay, let's write down the play. So we're going to say the play until jobs collapse, basically, or more, because they've already kind of been falling. So Kevin's take. So we'll say the play, call it the play until jobs collapse again. It's ironic because jobs already collapsed, right? Ironic because we already collapsed from 150K average jobs to, 29K over 3 months. Now, it seems the Fed wants negative 30K on average for 3 months before caring, which is a wild shift. But anyway, what does that mean? This means impact. So we'll say a slower decline in yields. The direction is clear. The pace is obviously slower. Not uncommon. Markets last year got too enthusiastic as well about rates coming down fast. Okay. Slower decline in yields, but that direction, I think, is clear. Like, we go that way. This means, this has a slower benefit for real estate companies, lenders, etc. But it's kind of slow and sure, in my opinion. Unless obviously have some insane boom in earnings, spending, and GDP in 2026, confirming soft landing and rocket ship. In that case, tech, software, consumer discretionaries, Tesla, for example, this is just like rocket, right? In the event that if we get a shock, if October, November data shocks on jobs, let's go see what the current estimates are. Economic estimates. Let me grab them really quick. Economic estimates. Yeah, somebody says, I don't think we want rates to drop too fast. You don't, because that would be recessionary. You are correct. So 10. Okay. So ADP is expecting 50. Let's write down, expectations here. So let's jot down ADP expectation is 50K jobs. That's actually good. If we get that, that's actually not bad. That would be in line with the prior, which would evidence basically no further weakening. So this would essentially be unchanged from prior 54K jobs. All right. There we go. And then the labor report, change in non-farm payrolls, that's only showing 42. Let's see. VLS jobs, 42K. But how many estimates do we have right now? I don't think we actually have that many. We have only 8 estimates at 42K. On just 8 estimates right now. We'll get 50-ish more. So TBD. But if this happens, right, these numbers would be good. These numbers would signal a resumption up on jobs and be positive. Right? If October, November data shocks on jobs to negative, okay, this is obviously where, bond yields plummet, rapid rise in real estate, related plays. You'll see probably that's where you get your stocks. Stocks sell, potential stop loss triggers. I'll call them trailing stops because they're more like stop gains. Potential trailing stops. Okay. Pretty simple playbook here, which really gives us, the current fears, or current nervousness. Current nervousness would come from jobs or potentially short-term government shutdown. Oct 1. But we get this government shutdowns. This is like old news. This isn't a secret. Government shutdowns are almost always a by the dip. Almost always. It just happens to be that this would align with, this period of time where you've got jobs data coming out. All right. So a little bit there. Let's see what else. Then we've got, see if the journal has anything else for us. Wall Street Burns. Oh, and the information. The Qs are doing really well right now. Up almost 30 bips. So, could be interesting. SunPower's leads new solar industry consolidation. Oh, I wonder if this is why Enphase is moving today. Okay, let's see here. Sign of a new wave of renewable energy consolidation. SunPower has agreed to acquire solar power company Sunder Energy. $55 million? That's it? Bro, that's a tiny company. That's like a fraction of HouseHack. SunPower. That's delisted. SunPower. Is SunPower not public anymore? Oh, maybe they're not. Maybe this is just private now. How interesting. Okay. Solar power backed by battery storage has been instrumental in helping utilities handle surge demand. Let's look at RR, the railroad. Rhine-Tech Robotics. Yeah, I feel like we have looked at this before. Look at this. Look at this explosion here. I mean, from $2 to $5. It's like the new open door. We'll have to see what they do. Anyway, let's see here. Notwithstanding President Trump's skepticism, solar power on track for 80%. Solar power and battery storage are on track to account for.
At Replit, we believe everyone should be able to create software without limits and without knowing how to code. Introducing Agent 3.
Being the largest automotive retailer in Florida and family owned and operated means Morgan Auto Group has the selection you need, the options you want, and the service you deserve. From our home in Tampa down to Southwest Florida to Miami and West Palm, across Central Florida, through Gainesville and Lake City, up to Jacksonville and our state capital. Shop Morgan Auto Group, Florida's largest automotive retailer.
Let's see. That's it. Yeah. And what is this? Lithium America's big lithium project in NVIDIA appears to be in trouble. The Energy Department froze the $2.2 billion loan that's supposed to fund the company's Thacker Pass. Fundamentals of the loan are flimsy. Oh, so the government's or the company's having some Dalahalla issues. Dalahalla issues. Okay. All right. Let's go see what your Rhine-Tech Robotics is. Rhine-Tech Robotics. Okay. So what do we got here? Let's see. Yeah, you see these little like cart robots. Okay. Optimus will take your job. Let's see what it says. Bringing people together by automating. Optimus is impressive, but I'm here to help you with Rhine-Tech robotic inquiries, whether you have questions about our robots or need assistance. How do you know Optimus is impressive? I wonder what it knows. Optimus has been making headlines for its potential. Oh. If you're curious about models like Atom, Scorpion, or others, are you saying you're better? Well, I can't say we're better. I can assure you Rheinetech Robotics offers a diverse range of innovative robots tailored to your business needs. That's interesting. So, yeah, it's these little restaurant delivery bots. Okay. Explaining. Yeah. See if they actually make any money selling this stuff. That's always what it comes down to. All in Optimus. Optimus is indeed fascinating. We offer specialized robots. It's hard to piss this bot off. It's pretty good. All right. Passes the test. The outrage test. All right, so what do we have here? Do we have any quarterly filings? Yeah, we do. Okay. All right, let's go see if this company makes money or if it's just a memer. All right. RR Rheinetech Robotics. Today is the 22nd. How's it already the 22nd of September? Damn it, I just woke up to September, I feel like. Man, this year is just flying, dude. Flying by. All right. So, let's go find out. The Las Vegas company? Okay, yeah, here we go. Got to sell to the casinos. No, but I don't want a robot to deliver, drinks or snacks at a casino. It's got to be some lady with, the big push-up bra. Otherwise it's not fun. All right. Let's start with the balance sheet. You know why we start with the balance sheet, right?
Kevin is much more interested than most people, by the way, in the balance sheet.
All right. So, cash and cash equivalents. Okay, so we raised some money somehow. We raised a good amount of money. How did we get all this money? Where did this money come from? Because look at this. We just went to 52, about 85 million bucks, up from like 31. Oh, that's interesting. 85 mil in short term, up from 31 mil. Okay, so this came from somewhere. All right. Okay. Let's see. Current liabilities. Look at all these. Okay, but that's small. Thousands. That actually very few current liabilities. Very few debts. Almost nothing. I would call this negligible in terms of debt. This company has no debt. Okay, so where are they getting their money from? Let's go to the cash flow statement. Cash from operating activities. Well, the cash flow negative. Okay, that's fine. Purchase of equipment. So we're burning about 15 mil in 9 months. 5 mil per quarter burn. This is a tiny, tiny company. Proceeds from the issuance of ordinary shares. There you go. The benefit of being public, when your stock memes, you just issue shares. $71 million of share issuance. Wow. Good for them. This was basically $71 million raised from issuing shares. The benefit of being public. Okay. Then over here, we actually have we have declining revenues. And this margin change, I don't know what to take of it. But your revenues are actually declining. which is bad. You know, you're not even growing, and they're already low numbers. Revenue down 3601 divided by 3715. I'm down 3.1% year over year. That's not great. And then we've got R&D is down. R&D is divided by 1633. Hold on, 1337. I like the number. 1633. Down negative 18% in R&D. G&A exploded. G&A up about 10 mil. Fundraise? Is that because they raised money? Probably. And then obviously they're losing money. Okay, what a surprise. So what commentary do they give? Let's find out. Aha. Okay. So they did an at-the-market offering of up to 100 million. So they did 71. Commission of 3%. 3% commish. Actually not terrible. Legal fees. Okay, revenue recognition. Can we get management commentary on what happened here? Company issued more shares. Overview. We're a leading provider of service robotic solutions. No, you're not. Yeah, there you go. Casinos. Of course, that's what they want. They joined the NVIDIA Connect program. Who cares? They bought a property in Vegas, a $20,000 property in Vegas, or 20,000 square foot property, and relocated our headquarters. Okay. Robot as a service? Man, that is one hell of a bet. RAS model. Everybody wants as a service. As a service means dollar hollers. Okay. These kind of robots are too slow, man. Revenue decreased. Do they give a reason why? A strategic shift to a RAS model. Oh, okay. We're not going to sell the robots anymore because we've sucked at selling them. We're actually going to license them to you through a multi-year service agreement. Oh, we'll spend the money. You just pay us a little bit. Oh. Okay. Robotics. Rental revenue. Bro, your rental revenue has collapsed. What the hell? You're bragging about service revenues, and your service revenues are down, what, 30%? 20 to 30%. Glautia is the revenue generated from Coffee and Tea, our boba tea store. Why do you have a boba tea store? Who is running this company? Oh yeah, hey honey, you know it'd be a great idea. Let's get into boba tea. Because we can't test our robot in our factory. We need to actually open a store. And their revenues went to zero, so I think they closed it. That's not good. Let's look at this. Coffee and Tea, Vegas. The revenues go then. Oh, there it is. There it is. Line Tech Robotics. So you can go see one in person. Let's see what people say about the robot. You know the Yelpers are going to be blunt. Let's see. Wait, wasn't good. Atmosphere is good. I want the robot. Oh, yeah. Human behind the counter seemed distracted by our intrigue of the robot that makes our drink. Okay, so this person is just complaining. I mean, I want to see the robot make the drink too. Here's the business owner. We're thrilled that Adam the robot left a memorable impression. Here's your robot named Adam. Okay. People seem to like the robot. Place was neat. I'm down for robots making food and drink as long as it's done correctly. Yeah. Okay. Did the robot screw up at all? He replied to all their reviews. Robot, adorable robot makes drinks. Okay. Let's look at bad reviews. Those are just the filtered reviews, right? Let's see what the 1 stars are. Robot was messy, left the cup sticky, and put very little ice in. Yeah, I mean, that makes sense. On rare occasions, Las Vegas water quality can lead to a robot to be light-handed with the ice. Right. It's actually Las Vegas's fault. Okay. The only cool part was the robot making the drinks. Okay. All right. I mean, people like it as novel. So it's a novelty. Right. I think that's probably what you have here is a novelty. But I mean, this is good for them. They can raise money, you know? This is what they did. They raised a bunch of money over here in May, and then that's why the stock came down. So now you got people enthusiastic over this. But I mean, this is a tiny, tiny company. The fact that it's almost $1 billion market cap, insane. For the money that they make here. It's crazy. Dangerous, in my opinion. Not worth. So let's see what somebody's saying. AMD. But yeah, I wouldn't buy this. This is I mean, maybe it's like a short-term memer. Oh, AMD is testing the 160s, but beyond that, it's a honeypot for them to be able to issue some more shares. Good for them, though. You know, again, that's the point of going public. You get to issue shares when it's desirable, or provide liquidity for your private shareholders or your employees. And there are a lot of tools that make going public win-win. I'm a big fan. We'll take a house hack public one day. Maybe after our AI booms, which we're really excited about. Got our AI beta launching still tentatively in Q4, which is pretty exciting. All right, what's going on over here?
Which Kramer kind of suggested we might see mid-session.
Yeah, I mean, it's been the pattern, and it doesn't take a lot, meaning a little bit of buying in the biggest names, and that's been
boring. Nothing over here. Let's see what we got over here.
It unveiled today. We had previously reported that Andreessen Horowitz, the venture capital firm, we have reported at Bloomberg that they are going to be involved. But it sounds like it might still be sort of taking shape a little bit here. And, Caroline, as we mentioned, this, just because the president says, hey, we have a deal and it will be signed, this has been such a contentious issue, contentious deal over many, many years at this point, that I think until everyone truly signs on the dotted line, we have to assume this is still being sort of negotiated and worked out in real time. So it seems we're the closest we've ever been. But again, until that deal is formally signed, I think we have to assume things are still moving a little bit.
Rainbow's Cat Wagner. We thank you for the latest. Look, let's stick with one of the key players in the TikTok story, and it's Oracle, because the company has also just announced that it's promoted Clay McGurk, Mike Cecilia to the roles of co-CEOs, replacing Safra Catz, who's led the company since 2014 and moves on to a board role. Let's bring in Bloomberg's Brody Ford, who covers Oracle. And it's a big change at the top.
Nah, I don't really care about this. Let's talk about the Fed, and do a little yappy about that. And then, hold on, let's see what else we have here. This is okay. Let's see. What is this? Oh, okay. Okay. That's good. Okay, good. So, Lowe's. All right. There, that's fine. What is this? A third of U.S. states may already be in recession, per the Financial Times. U.S. manufacturing and construction are experiencing recession-like conditions. Just go take a look at that. Okay. Let's see, that's an FT piece. Financial FT. And where is this recession argument? Let's find out. And then we'll do a little Fed recap here. Recession. And how are bonds? Yeah, still basically flat. Aha. What is this? Oh, no, that's older. 8. Nope. Last 24 hours. How broad is the rally? Recession. Nope. I'm not sure where people found that. Okay, that's interesting. Somebody's making the argument of that. The FT is saying that Financial Times, 1/3 of states may already be in recession. And manufacturing and construction are experiencing recession-like conditions. Yes. All right. Okie dokie. It is time to talk about the Fed. Take a quick look over here again. AMDIZ. AMDIZ is, oh, look at it, reject on this line. Twice now. Twice rejected on 161.85. Bitcoin's losing a little bit over here. And Tesla's starting to rotate down. The momentum's fading, but Apple is just kicking butt. Straight up right here. Good for Apple. Okie dokie then. Let's see. Fed. All right, let's talk about the Fed. Cool. This morning, we had two folks from the Federal Reserve give us more insights into why maybe things are just fine and we don't actually have to cut rates 3 times this year. See, last week when we had the Federal Reserve meeting, we got what was a really dovish statement from the Fed. Priced in 3 cuts. They removed the word solid from the jobs market. Mark's like, oh, this is going dovish. Then Jay Powell walked that back, went pretty neutral. 3 cuts seems appropriate, but hey, things overall are strong. And the jobs market is below break even, but it's okay. We're not in a rush to cut, which is weird because it's like, wait, if we're below break even jobs, then why are we not cutting more rapidly? Well, maybe it's because Jay Powell was forging consensus with the 2 people I'm about to give us insight on who don't actually think we need to be cutting at all. For jobs. Now, I think it's important to remember quickly, what is this break-even rate of employment? The break-even rate of employment is basically the number of jobs required to keep the unemployment rate stable. So if we're at 4.3%, over the last year, break even may have been, call it 150,000, right? And as we get 150,000 jobs, the unemployment rate basically doesn't move. That was our average unemployment or jobs read since, most of the year or for most of the year. Now, people are expecting that break-even rate could be somewhere between 20 to 50,000, maybe break-even. The Economist actually goes as far as saying zero, based on potentially negative net migration into the country, which this is also where a lot of people talk about the H-1B visa issue, which I can give you sort of a quick take on my opinion on what this whole H-1B visa thing is. It's basically a tax on people coming into America, right? And this is very popular because a lot of existing people already in America say, hey, we want more jobs for Americans. And so that's how Donald Trump and Lutnick are pitching this. They're saying, look, $100,000 H-1B application fee. So even just to apply, we're going to it's probably more like 20 to 40x the cost of the H-1B visa, which usually costs somewhere between $5,000 to $10,000. The gold card is an option to pay $1 million for residency if you're an individual, or $2 million per company employee if you want to relocate company employees in your business. So basically charge the businesses twice as much, but the business.
As children grow into teenagers, many grow curious and engage in increasingly risk-taking behaviors. Some risks nurture their independence. Other risks can be harmful, like using illegal herb. Approved conditions that require medical herb treatments exist for children. However, illegal herb is still potentially harmful to youth, and yet nearly half of school students have reported using it. Speak to your child about medical herb. Florida A&M University's Mary
100 Indian workers to work in, your technology department at Microsoft or whatever. Maybe you'll open a Vancouver office instead. The net result of that is lower migration into the United States. We're already having fewer, children below replacement rate. We already have virtually zero migration, in part because of how stringent the border is now, which, a lot of people are like, that's what I voted for. Well, that's fine. I think Trump's done a great job on securing the border. I think some of the immigration raids are a little, excessive. And then obviously now this H-1B visa thing, all it's really going to do is tax more people coming here, which means fewer people come here. So that means the economies of other parts of the world benefit from more people, which means our break-even employment rate might actually be even lower. So in other words, to keep our unemployment rate low, if the employment population is shrinking, it's actually possible that you can have a negative break-even rate. Because if there are people, retiring or dying, and then fewer people are being born or coming into the labor force, you could actually be at a place where the break-even point for the labor report or the labor market job reports is negative. You could be at negative 20,000 jobs per month, and the unemployment rate stays stable. Which was just like, that'd be crazy, but it's possible. And so that's what's driving people like what the Fed said today, to say, hey, maybe the employment market is just fine. And so that's where we get into what Bostic and Muslim said this morning. So Bostic says, look, we're only going to pencil in one rate cut for the rest of the year. And this is something where, I've been telling people in the Alpha report, like, hey, in the near term, we are going to be up against Treasury yields going up post-Fed. And that's exactly what's happened. We called that before it happened, which is important. Just looking at it in hindsight doesn't do as much good. But now we can look at it in hindsight. We see this bump right here slows down that movement in lending companies or real estate companies that really started rallying over this idea of lower rates. We're confident that this direction is continuing, but now the Fed's not only walking back market expectations that maybe we'll get 5 rate cuts by March. Now they're even walking back the idea that we'll get 3 rate cuts by the end of the year, with Bostic saying we're only going to get 1 rate cut by the end of the year. That will likely push gold higher. Stocks potentially keep slogging up, I like to say, and yields kind of stabilize, maybe somewhere around 4.15, maybe even 4.2. So it slows down the boom a little bit. in terms of real estate related place, that is. Now, what really pisses me off though is you get people like Bostic who don't seem to really know where they want their jobs target to be. Bostic, for example, says the labor market is I don't believe the labor market is in crisis right now, but it's an open question in terms of how weak the labor market is. Well, shouldn't the Fed know? Shouldn't they have a standard? That's my opinion. That pisses me off a little bit. Like, I feel like they should say, we want this many jobs, and if we don't, we're going to cut. And just have some kind of clarity for markets to be able to expect something rather than, we'll wait and see. But that's what we're getting instead. Bostic says that the tariff impact has really been delayed, not just because of how Trump implemented them, but also because businesses are sort of delaying when they charge these increased prices, so really buttering out the impact of tariffs. And other countries really haven't retaliated against this as much as people thought. Now, Bostic also said that it's also taking longer to fill vacant jobs. And so in some markets right now, there's actually a shortage of workers, which potentially means you end up getting worker pricing power and wage price inflation, leading him to say, hey, maybe we got to be cautious here. Now, keep in mind, there's really no evidence of wage price inflation right now, but it's an argument. It's an argument that, hey, maybe there are parts of the economy that are still suffering worker shortages, and that could lead to inflationary pressures. All right. So Bostic basically says we need more weakening before we could really commit to more rate cuts. Moslem, who also spoke this morning, roughly says the same thing. He actually says that financial conditions are so loose right now that we really should be cautious on cutting. I mean, I think Zero Hedge had a fantastic piece from where they basically broke down Hartnett's like almost S&P 10,000 price target for September of 2027. And basically Hartnett is arguing that we are in a bubble, but that bubble is going up between now and September 2027. That basically we are in a relentless melt-up. Gold at highs, credit cards at highs, stock market at highs. And basically, the way to look at it is while you have all of these things at highs, credit cards, stocks, gold, we're getting rate cuts, we're getting tax cuts, and, tariffs are not meaningfully showing up yet. On top of that, you got the biggest jump in U.S. mortgage refinancing since March of 2020 on lower rates as the Fed is cutting into an accelerating market. This, by the way, is great for the stock market. I mean, look at Apple today. Apple's just absolutely killing it today. Tesla, absolutely killing it today. And I personally am bullish a slow slog continuing on the Qs. We had a meet Kevin Alpha target of 600 on the Qs, and we hit 600 last week. We hit 600 again this morning because we were at 599 when we opened this morning. And I think this continues in the face of this sort of like expanding bubble, if you will, which is fine. You can make money off of it. But also refinancing activity. Consider this for a moment. Refinancing activity and the real estate market. Where is that money coming from, right? A lot of people are like, hey, like, how do people have money to refinance right now? How do people even have equity is the idea, right? Well, here's the answer for you. 54% of homes in the United States are owned by seniors. And the vast majority of these seniors, 76% of them, have no mortgage at all. I'm a real estate guy, okay? I look at real estate data very closely. And these seniors are refinancing and pulling money out of their homes. Their loan to value right now on average is only 24%, which means they barely have debt on their homes. Some of that money is literally going into consumer spending, financing their lifestyles, vacations, buying junk for, their kids or grandkids or whatever. Some of the money is actually also going into the stock market. And you have to think about it this way. Why borrow on margin when you could get margin called if you could just take out a home equity line of credit at 8%, which is way cheaper than a personal loan from SoFi at, say, 12 or 13%, way cheaper than a credit card at 20%, and no margin call. Just take some money out of your real estate and go throw it into the stock market. All of that absolutely contributes to a disaster in terms of a bubble economics, right? That's not good in the long term. But in the short term, it's fantastic because in the short term, it just means you have this available capital that people can reap or extract from their real estate and keep this economy booming. And seniors are heavily in part to blame for this. Now, HELOC lending, and this is a very interesting one. And then today, real estate related names are doing, they're not doing as well because those yields are coming up. We knew that, right? Even before the Fed meeting, I said, hey, look, course members, if you are investing in real estate related names, expect some air to come out of the balloon after the Fed, because they're gonna end up seeing, as if they're anything but super dovish, like if we get a neutral Fed, we are going to see yields go up and it's going to hurt the real estate names. So just know that. And that's exactly what happened. But there is a company that, as course members, we bought on IPO day. And that company has been straight up since then. On IPO day, we were around $34. It's trading for like $43 right now. So this company is a HELOC provider. And what's really interesting about those home equity lines of credit is that home equity lines of credit have more than 5x'd from 2009 to today. So that home equity industry is skyrocketing. On top of that, second home loans are also blowing up. Rocket Mortgage is the third largest provider of second home loans. So these lending plays are really helping enable this sort of like stock bubble that we're seeing. And as rates slowly trend down again, which they will, they'll normalize back down again. These companies could continue to be big beneficiaries of people basically breaking the piggy bank of their homes and investing in the stock market. And again, if you want all those sort of like buy, sell alerts, everything, make sure to get the Meet Kevin membership at meetkevin.com. But you already know that. Let's keep that discussion short. So that said, now we've got to consider Muslim also goes on then to tell us, hey, look, the jobs market right now, we really need to see a real plummet in jobs to actually encourage some form of continued rate cutting cycle here. And so what do they say? They say that, well, markets say that current ADP jobs expectations for next week, 50,000 jobs. That would essentially be unchanged from the prior 54,000 jobs, which would not be conducive to rate cuts. The BLS current estimate, 42,000 jobs. Now, we only have a few estimates right now. That'll change, but that's way up from the 22,000 that we had prior. Remember, 22K prior, really low. That's like indistinguishable from zero once you factor in revisions. It's actually probably negative. So going back from 22K to 42 would be good. Maybe gets us out of that negative territory. In addition to this, both Muslim and Bostic saying we really need to watch that data as it comes out next week, because unless we get really weak data, we might be done cutting, which is unfortunate, but that's okay. So they say more cuts are conditioned upon further job weakness. Policy uncertainty easing could also add to growth. So businesses potentially, this is like a double negative, are getting less uncertain because like we get tax cuts, we kind of understand the tariff dynamic and stuff now, which leaves us, quote, little further room for rate cuts. So both of these folks, unfortunately, talking down the idea of rate cuts. Muslim also goes as far as saying that labor market risks, while they're weighted to the downside, we have not actually seen the benefits of AI productivity yet. Says it's too soon to argue we've seen the benefits of labor market productivity, which could contribute to a boom. So you've got Bostic saying, hey, maybe we've got still shortages of employees, which could lead to wage pricing power. You've got Muslims saying, hey, AI productivity and business uncertainty, both of these things are tailwinds for the economy. We got a lot of things suggesting that this economy could truly soft land. And unless we get bad reports here over the next, couple weeks over here, don't expect big rate cuts. Maybe one and done is the way to go. Right now, markets are pricing in about a 90% chance, 90.9% chance of a rate cut October 29th. And then we have about an 82% chance of a second cut thereafter, which leads to a combined set of 1.7 cuts priced in for the rest of the year. So even in the face of that jobs weakness that we had last month, unless we get even more weakness, we're just not seeing the pressure for more rate cuts. Cody here says, won't Doge make the next two reports very negative? This is a reference to I've been asked about this like 20 times. Sorry, I've been asked about this so much. So I got this answer ready to go. Live stream comment here. Thank you, by the way, for the $4.99. And thank you to somebody else donated to post a picture here, like an emoji picture, donated $19. That's really nice of you. Double prizes. I appreciate that with the little trophy you're holding on. Thank you. So here's the thing. Yes. Doge rate job cuts that took place at the beginning of the year, those positions see their leave end in September. Those people could immediately apply for unemployment, which those numbers would show up the first week of October. So yes, that could be really bad. In addition, you are going to see some people take longer to apply for unemployment. So not all of the numbers will show up all in October. They could show up in November. However, what markets are going to do is markets are going to look at those labor reports and they're going to say, okay, let's say we got a bad jobs report. How many of those bad job numbers were Doge related? And they will add those back in. So in other words, let's say we get 50,000 jobs, but then we're minus 100,000 because of Doge. I think markets are just going to go just add the Doge numbers back in because they're one time. Oh, cool. Okay, we're growing at 50,000 jobs. And it'll actually be bullish the economy rather than bearish the economy. So whatever ends up happening with this September jobs report is critical. But whatever happens because of the Doge portion is not critical. The Doge portion will get adjusted out. It's everything without Doge included that will matter. So that's really important. So I would watch that very closely. So let's see. Do you think H-1B new fee will push companies to hire more remote workers? Yeah, that's what I was talking about earlier. Is that you're just going to hire people, and then park them somewhere else. They don't necessarily have to be remote. They could be remote, but you can also hire people and then park them in Canada or in Mexico or wherever else because there's no tariff on labor, right? So think about that. There's no tariff on labor. So, somebody in customer service working out of Vancouver to provide customer service to America, there's no tariff on that. So if there's no tariff on that, you may as well not bring H-1B people into the United States. You may as well leave them somewhere else. The long-term downside of that is you have fewer people in America. But that's kind of what Trump and Lutnick want. They want fewer people in America because they have this argument of nationalism, which is, hey, these people are coming, taking our jobs. Whether that's true or not, I guess remains to be seen, but it's worth considering. That's the environment that we're in right now. So, yes, as usual, we have a government shutdown looming October 1st. Who cares? Nobody usually cares about that. And then we have big job data on the 1st with the ADP and on the 3rd for the BLS survey. But until then, you've got a Fed here that's like, hey, things are booming. Who cares right now? Why are we going to promise all these extra rate cuts when the Atlanta Fed GDP is sitting at 3.3%? I mean, look at this. And the next GDP update we'll get is on Friday. But it's pretty impressive. Now, there is talk that, certain segments of the economy are potentially in recession. There was a comment that the Financial Times apparently made that you've got maybe construction in a recession. I actually think that's great. It gets, cheaper opportunity to pick up, construction-related material for house hack. I'm a big fan of that. I love that because, we're building ADUs, like we're building more homes, but that's what we do, right? Like we're a company, we don't just buy fixer-uppers and provide housing, but we also build housing to provide more housing for people. And then we're booming on our AI. Like we don't want the market to crash. Look, if we go into a recession, it'd be great for interest rates. Interest rates going to zero, fine. We'll break the piggy bank, so to speak. We'll refinance our properties that have no bank debt. So I guess it would be finance, not refinance. And we'll go buy a bunch more homes and do the same thing, build more housing, which is what people want. But as long as the economy keeps booming, like we'd rather sell our AI product. Because it's, we think, going to be mega profitable. I mean, no guarantees. I'm a little biased in CEO, but I think what we have cooking with our AI is so good and so powerful that it's unheard of in the real estate industry. And I think it could 1,000.
We've had overwhelming feedback from many users that Augment Code's base price is too high and too expensive. So many comments. To address this, let me introduce our new
is a great time to sell an AI product. You know, you don't want to sell an AI product in a recession. I'm just saying, it's like, hey, either way we go, it's fine. Like, so I don't have a bias. Oh, look, a banner. Get $30 off on the Meta glasses. They just came out with new Meta glasses too that have more battery life. So yeah, you could use meetkevin.com/meta to get that. Meetkevin.com/Webull also. I'm pretty sure Webull's still doing their 2% balance transfer. So if you get 2%, if you balance transfer your funds into Webull, that's where we always watch the lines and target our $600 target here. We'll hopefully go up from here. And then if you're looking for a good fintech bank, go check out meetkevin.com/bank. All paid sponsors there. But anyway, let's see. Somebody here says, all the contractors I know are still booked out 3 months, which is pretty healthy. Well, that's great. Every area is going to be different. And remember, as a licensed contractor, you have to book out. You know, if you don't book out, you're going to start taking jobs you shouldn't be taking. So you have to book out, especially since you have to consider permitting projects for a lot of contractor work. So I don't know that, you know, the anecdote that, hey, contractors are still booked out 3 months is super useful, just because you know, there is a risk that is just very typical and normal. So anyway, somebody here says Beechcraft Aviation Museum in Tennessee is a must visit for aviation lovers. You donated $9 to say that. Well, that's very nice. That's very nice to you. I'll have to check it out. So anyway, 50 states, 50 highest point. Okay, let's go. Yeah, I hit them all before you turn 50. All right, so that gives us a little bit of economic insight. Cool. Let's see what they're saying over here about the H-1Bs.
About whether or not this was a one-time fee versus a continuous annual fee, and what essentially happened for the first 24 hours following the proclamation was pretty close to chaos. We had some clients who are very well-known tech companies who either contacted H-1B employees who happened to be outside of the United States at the time the proclamation came out, asking them to try their best to come back before the $100,000 fee took effect. And then also we had a lot of companies, not just the companies that we work with, but very well-known companies, you know, in the market, tell their employees to wait before engaging in any international travel until we know more. There was also instances of international flights that were getting ready to take off where several passengers requested to deplane, specifically because they wanted to avoid their companies being charged a $100,000 fee if they attempted to re-enter after an international trip. So like I said, the first 24 hours were extremely confusing, and we did the best that we could to provide the guidance that the companies need in order to communicate to their employees with what very little we knew.
Heba, $100,000 is the fee. From this point on, what is the strategy for America's biggest technology companies and also smaller startups? Do you think that it's a manageable fee? And what is the kind of process from here? Do they just slow down hiring in the H-1B category?
A $100,000 fee for an H-1B visa petition is not manageable at all for startups, for small businesses, even for mid-sized businesses. I think that this is going to make it extremely difficult, if not nearly impossible, for startups, small businesses, or mid-sized businesses to hire the talent that they need in order to be able to compete on a global scale. For larger tech companies,
FT is Financial Times,
that the ability to manage a fee of this amount is not going to be as difficult as it is for startups. But I want everyone to remember that a lot of these extremely successful international companies were once themselves startups. And so any policy that makes it harder for American startups or small businesses to innovate is going to impact our competitiveness down the line.
What's been extraordinary for many has been just seeing where the outsized impact has had, who it's had upon. And in particular, it's people coming from India, it's people coming from China, Heba. The argument coming from the administration is that the H-1B visa process wasn't being used as it should be. Have you got any evidence of that?
I have no evidence of that. I think that there are quite a few checks and balances built into the H-1B process as it stands today. And that's actually inclusive of several levels of scrutiny as well as extensive background checks. And there is prima facie evidence, basically, in other words, preliminary evidence that has to be submitted with the initial application for an H-1B visa in order for that application to be successful in the first place. And so I haven't seen any evidence of misuse. I think that it's a really critical tool for our companies, both tech and in various other industries, in order for them to stay competitive. I also think it's important to point out that people normally associate the H-1B visa with tech companies, which is very true. But there's a variety of different industries that rely on the H-1B visa, including research institutions, universities, and healthcare. And so this has the potential to really impact a lot of different American institutions, assuming that this goes forward and is not caused by litigation.
Now, we did see that there was an update coming from the administration that potentially doctors would have a carve out from $100,000 in terms of a fee here. But let's go back to California, the state that's most impacted according to our data, and indeed Texas, New York, New Jersey. The companies that are based there, and then we look at the, as you say, the industries, professors, scientists, technology services, manufacturing information. These companies, what do? Do they hire outside of the US to be able to make up for the talent shortfall while the training goes on in the US? Or is there any idea that there is enough talent here to satisfy the needs?
That's one of the concerns resulting from this fee. The concern is that a lot of companies would choose to either pause hiring, in particular international hiring, but also may choose to shift their operations abroad. And that is going to have extreme effects for the company as well as U.S. workers that work for the company. So that's one of their concerns. The other concern, as you mentioned, is that there's a variety of different companies that rely on the H-1B visa. And so there is language in the proclamation that carves out exceptions for an individual who the government deems is in the national interest of the U.S. However, what we still need to understand is the way in which these arguments requesting a national interest exception are actually going to be treated and adjudicated. As it stands now, the evidentiary standards for successfully making that argument are actually quite high. So I don't think that the language that carves out an exception is going to help any of the concerns that the industry has.
But Bloomberg's reported at length that the expectation is immediate legal challenges to this executive order. And they note in that reporting that...
Yeah, but the courts love Trump right now.
...definitely set in a legislative or codified way fees and other associated costs. Could you just explain where you stand today, where the precedent is to challenge this, and any action that you might take on behalf of clients to challenge it?
I think that anybody who's getting ready to make a legal...
All right, home team, about to go ahead and sign out. As you guys can see, price kept running up. Didn't provide the entry today. Almost got it on this 10 o'clock candle between 10 and 10:15. Price got down to 46.89. We needed at least a 46.460 entry to get our stop under the SL4, which was about 46.362 in the head. So didn't provide the entry today. Just locked up my account. My partner just locked up his account. No trade today. NQ broke out. ES broke out, man. So it was a good bullish day. Shout out to the long portfolios. Got a couple of options out on AMD. That's going pretty well. So good day, man. All in all, made some money in the other part of the business and protected the capital we made last week. So great day on process, man. A+ on process, man. So I appreciate everybody stopping by, tapping in with us. Make sure you like, subscribe, comment. I appreciate all the viewers of the content over the weekend. Numbers going crazy, man. We're going to end the year very, very strong, man. So I appreciate all of our supporters, man. Make sure you guys tap in with the Discord, tapping in the comments. If you got any questions or anything, man, I'll tap right back in with you, man. But besides that, I'm going to go ahead and enjoy my day. Shout out my partner, Boss, behind the production. Shout out every one of you guys. We'll see you tomorrow, same time, same place. Twin Peak Traders, we're out, man.